Welcome back. You're watching Midcap Radar on CNBC-TV18. We are now being joined by Indrajit Mookerjee, who is the Vice Chairman at Texmaco Rail and Engineering. Mr. Mookerjee, good afternoon. Thank you for joining in. Before we get to numbers and to talk about the road ahead, I'd first like to ask you your views on the budget. The numbers that came in for the railways, the allocation when it comes to infra upgrades, rolling stock. What do you make of this, the allocation that has been made for you as a company?
I think this is what we were expecting. It is something not very unexpected because the total capital outlay has marginally gone up. But if you would see that the loading is also marginally going up, they are going to buy the procurement of wagons. In fact, have been up by 20% as we see as the estimate for the 25-26. The most importantly is that the railways have given an estimates of making positive cash flow for the year, and a major chunk of that cash flow is going to come from the freight cars revenue. This is going to be up by something like about from 180,000 to 188,000 crores. So which means that can only happen if there are more number of wagons come in and there are more transportation. So obviously, we expect that it's something like what we expected in line with the National Rail Plan.
Okay. Mr. Mookerjee, the other thing what we want to understand from you is, now given the budget, given the order book that you're sitting at a little over 8,000 crore, would you be able to quantify, number one, the order prospect pipeline for Q4 and FY26? And at the end of FY26, can you give us a guidance as to what exactly are the kind of order inflows you anticipate and where could your order book stand at?
You see, if you have to, let's do a little bit of math. Right. If our own company is concerned, so we are sitting on something like about 12,000 wagons order right now. And that's actually is we are producing close to 12,000, maybe slightly higher. So if you have to keep a similar kind of numbers, then we should have at least 1.5 times of the order book that we have today. And one very important thing is that if you strictly talk about the freight cars, which are the wagons, the orders are going to be from railways, but there are also orders going to come from the private players. So because the commodities have to move. So answering your question, that I would expect to end up 2026 with a order book on the number of wagons should be more than what we have today, and that's the kind of order that I think we should be able to procure. The market is pretty good. And I'm not even considering the markets which are also available outside India, the export market. I'm only talking of the Indian market, which consists of the purchase by the railways as well as by the private players.
So allow us to push you a little bit more. 12,000 wagons is where you are standing at currently. So FY26, what kind of percentage growth can we see? Domestic market, what will you anticipate? And export market, what can you expect?
Percentage growth of procurement by the percentage growth of national procurement, is that what you mean?
That's right, and depending on your order win ratio, yes. Yeah.
My own hunch, if I can do, it's going to be something like 15-20% higher than last year. I mean, but that's my own guesstimate.
But Mr. Mookerjee,
based on lots of data.
Right. And based on that data, then if you could tell us that 35 to 40% growth rate that you're expecting over the next 2 years, do you stick to that? Because your 9-month growth rate is fairly healthy. So do you expect to be between 35 to 40% conservatively, or would you want to?
We should be able to do that because it's just not the wagons that makes our business. The wagon is about 54% of our order book. So we are in jobs like electrification. We have the foundry. We are rejuvenating our EPC business, which was remaining flat for the couple of years. So that's a big area. And as you have seen that there is so many tracks are going to be laid, and safety coverage. All these are coming up in the budget for the next year's expectation. And we have one of the few companies we have got the credentials to do all this. So I think it's not going to be only wagon. but it's going to be combinations of so many other arms. So electrification business is doing very well.
Mr. Mookerjee, you've given us a good sense of the business. Now, the other thing that you've done, especially over the last year and a half, has been multiple corporate restructuring. Give us a sense of the potential demerger of the rail EPC business. What will be the order book that gets transferred over there, and what are the kind of targets you're setting for the EPC part of the business?
See, current now the order book is not that high. It's going to be in the range of 8 to 1,000 crores level. We are executing a few very important projects. We are finishing the Western Dedicated Freight Corridor. We have in metros, couple of metros like Bangalore, Bhopal, etc. But I would expect that our order book will be particularly on the track laying, signaling. We'll have substantial orders coming up.
All right, Mr. Mookerjee, thank you so much for sparing time, joining us today. Wish you good luck for the rest of the year as well. That was the management of Texmaco Rail, sharing light on the road ahead as well. With that, it's a wrap for this edition of Midcap Radar from me, Vivek, and the team that put this show together. Thank you so much for watching. On the other side, a very special edition of Market Masters when we return.